All right, we all know breaking up is hard to do, right? Yet investors are cheering the potential split of News Corp. Shares, they're up more than 10% since news broke yesterday that the media giant may separate its entertainment and its publishing units. Plus, the split is seen boosting returns by at least 32%. So is the sum of this media giant's parts really better than the whole? That's today on 3 versus Trish. We've got Barton Crockett talking fundamentals. We've got Tom Essay on the charts. We've got Larry Schover looking at those options. All right, starting with our fundamentalists here. Yeah. Barton, from a fundamental perspective, does this just make pure sense?
Absolutely, it makes sense. I mean, was a real yoking of things that didn't fit together when you had a very secularly challenged, legally challenged publishing business hooked to a television business that's one of the best in the world. Separating them allows each of these stocks to grab their constituencies. I think you'll see the publishing stock worth about $1 a share. I think you'll see entertainment worth about $25. The sum is $26. You'll get it over the next year. We're a long way there already.
Well, is the publishing business even going to be able to succeed and exist in today's competitive environment without having the backup of the television business beside it?
Well, the thing about the publishing business is it generates about $1 billion of EBITDA or cash flow. You are not growing, you're probably driving backwards, but if you manage expenses down, you can maintain that cash flow and you can pay a good dividend. That's what we're seeing the publishers do, is to come out with 6 to 7% dividend yields. These guys could absolutely support that. That'd put a floor underneath the stock and attract dividend investors.
Okay, so you'd buy this one right now based on the fact that it's going to split?
Yes, I'd absolutely buy it based on the fundamentals, and I think the split highlights value.
Okay, Tom Essay, you're not so sure. Tell us why.
No, I'm a little bit more cautious. Now, the gap that we saw yesterday, normally from a technical standpoint, I'd be all over buying this thing, but it's a news-based gap, and it's off of news that's been expected and wished for from investors for a long time, the final, split of this company. Short term, it's very overbought here. It did make a new 52-week high, so longer term, I think you have a nice bullish technical picture. But I would wait for a pullback here. It's very overbought in the short term.
Very overbought in the short term. Larry Schover, do you agree with that at all?
Right now I'm just looking at the options. It's amazing, Trish, when you think about it. What was only being whispered at the water coolers at 1211 6th Avenue might, in fact, become a reality. I mean, the fact that they might take television, cable, video, film, put it all together. Hey, the stock maybe be $100 a share. Who knows? But the fact is, the options are telling a different story right now. Volatility is cheap. Skew is flat, which means a lot of call buying and put selling. So I would recommend, if you're bullish on the stock, buy the stock right now at 22.5. Buy the January 20 puts. You can buy them at 80 cents. I mean, in effect, you're buying the stock at $23.30. You're protected in the stock down to $19.20 a share. Anything below that, you're 1-to-1 winner of the stock. Above $23.30 in the next 7 months, you're a winner as well. Vol is cheap. Buy the stock, but buy the option.
All right, but Barton, why did it take such a scandal with News of the World to bring this all to light? I mean, why didn't this happen years ago if it made that much fundamental sense?
Well, it made a lot of sense, but I think you had to change someone's mind, and that'd be the guy at the top, Rupert Murdoch. And I think you've seen a combination of, scandals that are terrible. I think nobody would have ever contemplated that. With the new CEO, Chase Carey, both working on Rupert and really pulling him into the modern age and realizing that's the thing that media companies are doing now, is separating the slow-growth publishing businesses from the higher-growth television businesses. He's joining his peers, and it's, about time.
Why did Rupert Murdoch not want to go that route? Was it about sort of helping to prop up and support the publishing industry?
Well, I think, look, that's where he comes from. That's his family legacy. That's how he grew up. He loves newspapers. I love newspapers. But the reality is that the business is challenged, and some people figure it out quicker. Some people figure it out slower. He's a little bit slower. He bought Dow Jones at way too high of a price, but he's there now, so better late than never.
Well, Larry, does this actually show us that, the Wall Street Journal and Dow Jones was just, as Barton just pointed out, he bought it at too high a price, that deal was kind of a failure for them?
It may have been, but, the jury's not out right now, and we don't know exactly why Rupert had his heels in the sand for so long. Maybe he needs to give his other son a job to take care of the publishing business. Who knows? I mean, the fact is, the jury is out. We don't know if this whole thing, if it gets spun off, if there's going to be clearly a conglomerate discount to the one stock and not to the other one. We will see. I mean, it's going to be fun to see, but it's not going to happen overnight.
Tom Essay, from a technical perspective, can a publishing stock really be able to survive on its own these days?
Not if we look at a lot of its peers. We have to see the charts, but none of the rest of them have done very well. So, I wouldn't see a ton of demand for that spinoff coming out of News Corp.
And we know the fundamental reasons for that, of course, as well. All right, thanks to the whole gang. We've got the cheat sheet for you on a potential News Corp split. Barton Crockett says, buy. He sees this split as positive for the company. Tom Essay says you need to be patient here. Wait for a pullback to go long. Larry Schober's got a hedged bullish trade. All right, tomorrow, everyone, on 3 versus Trish, we're talking RIM. Research in motion. The struggling BlackBerry maker reports earnings after the bell tomorrow. Tweet me your strategy. I want to hear it. We're going to talk about it with the pros. Interesting ones.